Hi, you may feel you've made your mark in tough investment markets, consistently earning supernormal returns. You may feel pretty confident that you're ready to take on currency markets. Relish that well-deserved sense of the invincible me. Foreign exchange trading is a term that sounds, well, almost foreign to most people, and yet, wherever you go, you're bound to hear someone wax eloquent about the huge profits they made trading in the Forex market. Intriguing, definitely. Murky waters to maneuver, certainly. Worth understanding in more detail, absolutely. You're listening to a MindWealth audiovisual M-Wave podcast. I'm Rohit, and this begins a short series on some essential thoughts on trading on the foreign exchange markets. In today's episode, we're going to touch on the why and how of Forex trading. Start with the all-important why. Be clear as to why you want to do the trade. Why choose this currency? Do you have a strong fundamental view on the euro? Do you have a view based on charting or technical analysis suggesting that the euro may strengthen sharply versus the dollar going forward? Maybe you live in America and have business revenues or personal income in dollars and wish to diversify your currency exposure. Do you wonder whether the euro could rise over the next few days, weeks, or months against other G7 currencies? Would you bet on a stronger euro? Maybe someone else desires to import capital goods or buy some property in a European country. That could certainly factor into a decision. Maybe you're living in a country whose currency is pegged to the dollar or trades in a very tight band against the dollar, like Hong Kong or other countries in the Middle East. Maybe your why is as simple as making enough for that upcoming fabulous family vacation, or a desire to wow your spouse with your financial savvy, or that special gift he or she wanted. Or maybe you're a personal trader seeking to capture market moves using various technical and sentiment-based tools. Whatever is driving your decision, so long as you're clear on the reason, you will have clarity on your threshold for pain. You'll know how much risk you're willing to take to get the return you want. Having a clear reason to do something is most certainly a lifesaver. Once you have your why, make sure to know how. You can trade with or without leverage, or with some leverage. Leverage is the concept of putting a small deposit down on a trade, known as a margin. When the trade happens, however, your profit is based on the full value of the trade. Let's say you have $200,000 in the bank and you wish to risk manage your current or envisaged euro exposure. Alternatively, you may have $1,000 to earmark and wish to take a €100,000 position against that. Or it could be both. You could have $200,000 in the bank but wish to risk no more than $1,000. Using leverage, you can participate in more trades at once and amplify your profits. I generally recommend working with low leverage. If your trade produces a loss, you're responsible to pay the entire loss amount, not just your deposit. If you do wish to use substantial leverage, then it becomes of paramount importance to be very disciplined in your trading strategy and work with what's known as a tight stop loss. For example, let's say you have $5,000 and wish to take a large size position. You do not wish to lose more than $1,000 in this position. If you take a €1,000,000 position, your margin of error is very small. Why? Let's say the euro dollar goes from 1.1300 to 1.1310, i.e. it's gone up by 10 pips. 10 pips on €1,000,000 is $1,000. So if you were long, you'd have made $1,000 profit on this move. If, on the other hand, you were short the euro at 1.1300 and your stop loss was at 1.1310, you would have lost 10 pips, i.e., you would have lost $1,000. Thus, you have a pretty small margin of error with this size. You might well consider taking a position of a smaller size. Or be comfortable that this is a risk and you're more of a jobber in the markets as opposed to someone trading for a few hours or a few days or a few weeks. Bottom line, set your stop loss or pain threshold and decide your trade size and your price stop loss. If you wish to learn more about leverage, head down and click the link in the description of this podcast to see an explanation of leverage. I'm not affiliated with IG, but being a trading platform, they have a fiduciary responsibility to explain leverage, so it may be useful to have a quick read. www.ig.com/en-ch/forex, or just type leverage Forex markets IG on Google and you should pick it up. Forex trading is no simple task. It relies heavily on your sense of risk and how well you know your market. Have your reasons and don't get caught up in too many things at once. Too many things also means too many positions. The idea of leveraging large amounts for one enormous win may sound tempting, but realize that the more leverage you take, the more you begin to damage your odds at making a profit. MindWealth offers transformational coaching programs to a global audience, helping you make it in your career, grow your wealth, and achieve mindfulness mastery. Follow us on Facebook and Instagram at MindWealthco. Connect with us at MindWealthco. Elevate your story with MindWealth. Stay tuned as we'll go through some more essentials of Forex trading in part 2 of this mini-series.